While everyone is chasing the same old tech giants and blue-chip stocks, there's a tiny company trading under $10 that just exploded 629% in 1 year. Yes, you heard that right. Over 6 times your money if you got in at the right time. This isn't some crypto gamble or meme stock frenzy. This is a real company with real contracts, real revenue growth, and analysts are saying it could double or even triple from here. But here's the catch. 99% of retail investors have never even heard of it. Today I'm going to break down everything you need to know about this poet stock that's flying completely under the radar. And by the end of this video, you'll understand exactly why Wall Street insiders are calling this one of the most explosive opportunities in the autonomous systems sector right now. Let me start by painting you a picture of what's happening in the market right now. We're living in a time where drones, robotics, and autonomous systems are no longer science fiction. They're becoming essential infrastructure. From border security to industrial operations, from defense applications to commercial logistics, the world is rapidly shifting toward unmanned systems. And here's where it gets interesting. While everyone knows about the big players in this space, there's a small cap company that's quietly becoming a major force, and the numbers are absolutely staggering. In the third quarter of 2025 alone, this company reported record-breaking revenue of $10.1 million. Now I know what you're thinking. That doesn't sound like much. But wait until you hear this. That's a 580% increase year over year. Let me repeat that. 580% growth. And it gets better. Their backlog of orders has reached $23.3 million, meaning they already have commitments for more than double their quarterly revenue sitting in the pipeline. The stock is currently trading around $9.27, and here's what makes this so compelling. Just 8 analysts cover this stock, and every single one of them has a strong buy rating. Not a hold, not a moderate buy, strong buy across the board. Their average price target ranges from $10 to $13, with some going even higher. That means even the conservative estimates are looking at 20 to 40% upside in the next 12 months. But some technical analysts are talking about scenarios where this could hit $14 to $18, which would be a 60 to over 100% gain from current levels. Now I'm not here to pump unrealistic expectations, but when you have unanimous analyst support and explosive revenue growth, you have to pay attention. Let me break down what makes this opportunity so special. This company operates in 2 critical segments. First, they provide industrial wireless connectivity solutions. Think of it as building private wireless networks for critical infrastructure like railways, utilities, and industrial operations. This isn't your regular Wi-Fi setup. These are mission-critical networks that can't afford to go down, ever. The second segment is where things get really exciting. They're in the autonomous systems business, specifically drones and robotic platforms. And here's the kicker. They just completed an acquisition of a company called Roboteam, which is a major player in defense robotics. This isn't just expansion. This is strategic positioning in a market that's about to explode. Now let me tell you about the money situation, because this is crucial. At the end of the third quarter, this company had $433 million in cash. Think about that for a second. A company with a relatively small market cap sitting on almost $500 million in cash. That's not just a safety net, that's ammunition for growth. They're using this war chest to make strategic acquisitions, expand their product lines, and grab market share while their competitors are struggling to raise capital. The company has set aggressive targets, $36 million in revenue for 2025 and $110 million for 2026. But here's what's really interesting. They recently updated their 2026 target to $137 million. They're not just meeting expectations, they're raising the bar. Let's talk about the elephant in the room, the risk. This stock has a beta coefficient of 2.17, which means it's more than twice as volatile as the broader market. When the market moves 1%, This stock could move 2% or more in either direction. The 52-week range tells the whole story. It's traded as low as 57 cents and as high as $11.70. That's a massive range, and it shows you just how wild the swings can be. The company is still operating at a loss with negative EBITDA of $37.79 million. So this is not a safe, dividend-paying blue chip. This is a high-risk, high-reward growth play. You need to understand that going in. But here's why sophisticated investors are willing to take that risk. The growth trajectory is undeniable, the market opportunity is enormous, and the company has the cash and contracts to execute on their vision. Now here's where it gets really interesting, and this is the name you need to remember: Ondas Holdings, ticker symbol ONDS. This is the company we've been talking about, and everything I've shared with you is based on their most recent financial reports and analyst coverage. Ondas is positioning itself at the intersection of multiple mega trends: the shift to autonomous systems, the build-out of private wireless networks, and the modernization of defense and border security infrastructure. They're not betting on one product or one market. They're building a diversified platform across multiple high-growth sectors. The Roboteam acquisition gives them immediate credibility and revenue in the defense robotics space. Their wireless network business is providing steady recurring revenue. And they have major catalysts coming up, including a potential purchase order in January 2026 for a border protection tender that could be massive. Let me put this in perspective for you. If you're looking at your portfolio right now and everything feels safe but stagnant, this is the kind of opportunity that can actually move the needle. A 20 or 30% gain on a blue chip stock is great, but when you're working with smaller amounts of capital, you need bigger moves to create real wealth. That's where poet stocks like Ondas come in. But, and this is critical, you can't put your entire portfolio into something this volatile. This is the kind of position where you allocate a small percentage of your risk capital, the money you can afford to have tied up in a high-growth, high-risk play. If it works out the way analysts are projecting, that small allocation could return multiples of your investment. If it doesn't, you haven't bet the farm. The investment thesis here is actually pretty straightforward. You have a company with explosive revenue growth, a massive cash position, unanimous analyst support, and positioning in sectors that are clearly the future. The risks are volatility and current lack of profitability, but the upside potential far outweighs the downside if you size your position appropriately. If it works out the way analysts are projecting, that small allocation could return multiples of your investment. If it doesn't, you haven't bet the farm. The investment thesis here is actually pretty straightforward. You have a company with explosive revenue growth, a massive cash position, unanimous analyst support, and positioning in sectors that are clearly the future. The risks are volatility and current lack of profitability, but the upside potential far outweighs the downside if you size your position appropriately. So here's my final thought for you. I'm not a financial advisor, and nothing I've said here is financial advice. You need to do your own research and make your own decisions based on your personal financial situation and risk tolerance. But if you're looking for a poet stock with serious upside potential, backed by real fundamentals and real analyst support, Ondas Holdings deserves to be on your watch list. Keep an eye on that January border protection tender, watch their quarterly earnings reports, and pay attention to how they deploy that massive cash reserve. This is a company that could genuinely be 10 or 20 times bigger 5 years from now if they execute properly. Or it could stumble and disappoint. That's the nature of high-growth investing. But for those willing to take calculated risks with proper position sizing, this is exactly the kind of opportunity that can accelerate your journey to financial freedom. Do your homework, manage your risk, and never invest more than you can afford to lose. That's how you play the poet stock game and come out ahead.